Well, good evening, everybody. My name is Joumanna Bercetche. I'm an anchor for Bloomberg Television. Very appreciative of you all coming. I know it's late in the week and it is late in the day, but we are going to have a fascinating discussion. The title of this session is a check-in on the Saudi economy. Now, the English poet John Donne once said, "No man is an island," and that is also true for today's economies, especially an economy like Saudi Arabia, which is an economy highly integrated into global and financial markets. Now, I've been here for all of the week. It's been a busy week for everybody, and I will tell you a couple of phrases that have come up just in the last couple of days. Number one is uncertainty. That's been a theme. Number two has been geoeconomic fragmentation. That was also the number one risk that was flagged in the global risk report that was put out by the World Economic Forum last week. So geoeconomic fragmentation. Also heard about New World Order. Many leaders have referenced that. And my favorite one came from the Canadian Prime Minister, Mark Carney, who sent a warning shot to Middle nations saying, if you're not seated at the table, then you're on the menu, which essentially meant that world's middle powers need to come together. We're not here to talk about geopolitics. That's not the focus of this discussion. But we are here to talk about how countries can navigate all of these global headwinds, the uncertainties, the challenges, and do it in a constructive fashion. At the end of the day, the title of the forum is A Spirit of Dialogue. So that's where we're going to begin. Let me introduce our panelists. His Excellency Mohammed Al-Jadaan, the Minister of Finance of Saudi Arabia. To his left, Ajay Banga, President of the World Bank Group. To his left, His Excellency Faisal Alibrahim, Minister of Economy and Planning for the Kingdom of Saudi Arabia. To his left, Jenny Johnson, CEO of Franklin Templeton. And to her left, Noubar Afeyan, CEO of Flagship Pioneering. Also, you may know him as the co-founder of Moderna. So, Your Excellency, I'm going to start with you. Quite simply, are we in a new phase in the global world order that requires governments to think differently?
No, thank you very much, and thank you everyone for being here. I think we have been in this new world for some time, but we are slowly realizing it. And the earlier businesses and governments alike realizes this and build resilience, the better for their companies and for their nation. The second point I think that needs to be said very clearly is absolutely uncertainty is now the norm. And businesses obviously hate uncertainty. And our role as policymakers is to make sure that we provide a predictable environment for their businesses. I mean, they can price trade tariff, they can price additional tax, but they find it very difficult to price ambiguity. And our role is to make sure that we provide a predictable environment. We are doing this. We are trying to ensure that we build that resilience within our economy and give the private sector that predictability that they need. And generally, the security of the decision-making process, that it is stable, it is predictable, and the returns that they are getting in their investment is the right returns for risk-adjusted.
Yeah. Ajay, can I ask you what you think the biggest challenges right now to emerging market economies? I spoke about many, perhaps geopolitical obstacles that need to be navigated, but there's a whole spectrum of other challenges as well. If you think about higher interest rates, higher debt load. I did a panel on debt actually yesterday. What do you think is the biggest challenge right now?
You got to break challenges into what you think happens in the next year or two versus what is systemically and structurally a problem in the emerging markets. And, if you step back for a second, I think the world is taken aback by the fact that growth rates have actually done better than people thought in the last couple of years. Now, if you, again, break that down, the US, China, and India outperformed. The US because a great deal of investment went into AI and data and infrastructure, but also because the US economy has got certain inbuilt, what I call shock absorbers and systems, which enable it to pull through at these moments. India and China China has outperformed in the sense it's a little under 5%, but again, better than people thought. And India has done close to 8%, again, better than people thought in the environment of uncertainty that Mohammed started talking about. But when you go to the other part of the world, the emerging markets, actually 1 out of 4 is still 10% lower in its per capita GDP than it was pre-COVID. Hidden inside that are all kinds of problems to do with debt, liquidity, fiscal management, profligacy in their thinking at that moment. When interest rates were low, borrowing felt easy. And as Mohammed once told me when I was first becoming a candidate for this, you have to think long term, not just this term. So I'm answering this to you in the same way. Think about debt and liquidity as a deep problem today. But really, if you want to think about both a problem and an opportunity, which I think is a problem not just for the emerging markets, but for the developed world, is the demographic bulge coming through the emerging markets in the coming 12 to 15 years. 1.2 billion young people are going to get to 18 years of age in the next 12 to 15 years in the emerging markets. Those same countries are currently forecast to create around 400 million jobs. And this is before, and we can argue about the merits and demerits of AI, and I have my own view, but this is before I factor all that in. Now, these estimates are made by economists, and economists tend to be notoriously wrong. But if they're wrong, they're not wrong by 800 million. Now, if we get this right and we work on creating jobs in those countries, we create hope, optimism, and an engine of growth for the world economy for the coming 30, 40 years. If we get it wrong, we create illegal migration, instability, military coups, social challenges, all the things that all of us will regret in the coming 15, 20 years.
Okay.
To me, this is therefore both the challenge and the opportunity. There's a great way to get this done. If we get chance, keeping an eye on time, we'll talk about that. I have a whole thesis of how it can be done. But to me, this is the underlying thing you have to keep an eye on.
An anchor for stability and within
the opportunity of these people,
of changing demographics.
But the alternative, yes, you got it. You got it.
Your Excellency, did you want to say something?
No.
Oh, okay. Your Excellency, Alibrahim, I also want to bring up the concept of trade as well. And one of the first things that I said is geoeconomic fragmentation. Again, lots of conversations about friendshoring, onshoring, rewiring of supply chains. I spoke to a trade minister. I know you're not the trade minister, but I spoke to a trade minister a couple of months ago, and he said to me, trade is like water. It always finds a way to flow. And I wonder, when you're thinking about long-term planning, which is, of course, your remit, how you keep the trade flowing and how you keep those cross-border dynamics going to ensure the stability that Ajay speaks of?
I think that's a very interesting question. I'll comment first by saying His Excellency Trade Minister always throws these phrases at us that we start to end up using in everyday policy making. So I appreciate that. But I'll start by saying maybe you said a fragmenting world. In a fragmenting world, one of the rarest things is that a commitment made today will be honored tomorrow. Trust shapes how we trade. It shapes how markets stay active and operational because the participants can predict what's happening. And as such, stability becomes a rare currency. Stability becomes an opportunity and maybe even a competitive edge. I'll use Saudi. I'll just connect this to Saudi. Saudi treats stability as a discipline, whether it's in policy, regulation, or in implementation and execution. It's very important. At the period of 24, FDI globally dropped 11%. FDI in the kingdom increased by almost 24%. It also shapes the quality of the investments that are coming into the kingdom because we prioritize stability. On top of that, continuous reform, but reform on paper is not enough. It needs to be coupled with a streamlined regulatory framework that guides and enables the private sector businesses to think long-term and navigate uncertainty with a little more confidence. Professor John List, University of Chicago, he talked about the time when he was in the White House, and we were asking him a question, and he said the number one objective for a policymaker is removing uncertainty. And I think that's Vision 2030 is working on that despite going through a massive transformation, unlocking potential, and the transition risk that comes with any transformation. You know, some uncertainty is avoidable, some is intentional. In the kingdom's vision, that transition, we couldn't avoid the uncertainty that came with the transformation, but we mitigated it by showing clear purpose, why we're doing what we're doing, what are the outcomes we're pursuing, and also continuous engagement and continuous updates on the progress. I think in a very fragmented world, or an increasingly more fragmented world, one way to maintain trade is to become a stronger economy, but also become a stronger economy through stability. And then maybe something in parallel that's outside of our remit is support the building up of stability elsewhere. And for us, it's a regional dimension too. Stability is not something you can buy or do like this. You have to build, and it has to accumulate with time for it to be the right kind of stability that nurtures prosperity.
Yeah. Very pertinent given today's signing ceremony. Jenny, well, you are CEO of Franklin Templeton, and you are responsible for managing billions of dollars of AUM. How are you choosing where to invest?
Just like water flows through on trade, capital goes where it's treated well. So, you're looking for markets where there is growing economies, where there's liquidity, where you're going to make good investments and good returns. And so, I think the first step in any market is ensuring that it's a good growing economy. So what is a good growing economy? What are usually the features in that? Oftentimes you have to have domestic demand, because that actually insulates your capital from other kind of shocks that happen in the system. I think what a lot of economies learned is that energy independence is a real strength, because if you don't have it, there can be a big shock there. I think regulation is really, really important. If you look at Europe, as I remind the Europeans, well, first of all, one little data point, 1990 per capita income was similar in US and Europe. And today, Germany is 20% lower. I think France is 35 and Italy's 40%. So we started on par, something happened. I remind them, I bet there's a lot of really brilliant German entrepreneurs, but for some reason, there isn't a big, massive German tech company out there. And I think that's regulation that enables innovation and is supportive of innovation and is clear, what the rules are, is really important. I think, one of the things that the kingdom has that's so strong is the Vision 2030 gives you a roadmap. So having that clarity, I think one of the shortfalls in the US, and obviously we've been able to get around it a lot, but we elect politicians in 4-year cycles, and so we tend to think and make plans in 4-year cycles. China thinks in 100-year cycles. That's another advantage. So if you can get it to, and younger demographics, that's really important. And India actually had almost all of those things, except they have pretty convoluted regulation, and that had hindered their growth. You have a new regime, you're starting to pull it together, and you see how it's taking off. So you start with that strong economy, and then the next question is, well, what are the capital rules around that? And liquidity, the ability for a diverse investor base is really important. Foreign capital being able to come in and out. So all those features, and with that usually comes really good investment opportunities.
Yeah, okay. Thank you for the comprehensive answer.
Is that too long?
Very direct question. Noubar, let me come to you. I introduced you as the co-founder of Moderna, but of course, you wear many different hats. You're a leading voice in the private sector, also a philanthropist as well. And I just wonder, when you think about some of the challenges that we were talking about, what role you actually see for NGOs and for multilateral institutions, and very cognizant that Ajay is sitting here, in dealing with some of these most pressing challenges?
Well, yeah, you've heard the macro view. I kind of, not even micro, probably nano worlds. I'm in the business of starting companies. I've been doing it for 40 years, particularly at the interface between human health and technology. And Moderna was one of those companies, and we learned a lot, and I'll come back to in a minute. So I'll just add my perspectives to this discussion. During COVID, first, the world was thrust into a form of uncertainty that's truly uncertainty. And I think I'm not an economist, but what I understand, this Frank Knight uncertainty concept is when you can't estimate probability of success, it's kind of hard to do risk-reward. if you can't estimate probability of success. And so when that type of disarray happens, people think it's really, really risky. It's not really risky. It's just the unknown what's going to happen. Well, it turns out that the innovation science world is filled with that. We actually wake up every morning and race towards uncertainty because we know that there's massive value hidden in the uncertainty. How do we know that? We know that everything that is popular today was uncertain 10 years ago. And so if we had an ability to work on what is happening today 10 years ago and owned it, we'd be paid a lot of money. It's just that Wall Street doesn't want to give money to uncertainty. They're more than happy taking it into the risk domain. So I say all this because I think it's important to distinguish the two forces. And clearly, at a time of uncertainty, you need to toggle between thinking present forward and thinking future backwards. And I think in that regard, the Saudi Vision 2030 is particularly useful in an environment like this, because if you could imagine what things may look like outside of the vagaries that have been imposed on the system really since COVID. I mean, if you look at COVID, it's not COVID that caused it, I hope, but everything has been a mess since then. It's been this spread is a pandemic of chaos in every regards. Supply chains, inflation, interest rates, wars, geopolitics, polarization. Just go back. Of course, you can go back earlier, but that was
some of that is correlation, not necessarily causation.
No, not causation. That's what I'm saying. But the rupture kind of, and again, I think there's more expert people here. To me, the rupture looks like we've entered a period of disequilibrium, which is not only bad for investors, but economists make, I think, most of their prediction based on an equilibrium. So what can we expect? As far as I'm concerned, what you can expect is the equilibrium to settle into a new order economically, in which we got to wait to see the opposing forces gather. And I think countries like Saudi Arabia are part of that, in that this is actually a big opportunity, in my view. It's a big opportunity. You might say, why would somebody in the biotech sector spend time with the kingdom, which I have done for the last 2 years quite a bit actively? It's because they have a Vision 2030 plan for biotechnology. Now, who would do that if you were busy based on resource-based economies? Answer, this is exactly the time to actually use technology, AI, to use the fact that everybody's now aware of health security and rather health vulnerability, and to start saying, you know what, not only do we have to take care of these things ourselves in the country, but also we can be an exporter, a net exporter of IP. So all of those things are interesting. I would argue uncertainty opens up these opportunities for countries that may otherwise be distracted within the equilibrium system. So that would be my added perspective from where we look at it.
Interesting. Okay, so uncertainty creates an opportunity. I like that. Your Excellency, given Noubar just talked about COVID, if you think about Vision 2030, the implementation of it, it has weathered many shocks. One of them is COVID, tariffs, lower oil prices, and the vision has also evolved as well. And I just wonder how you think about the evolution, the recalibration of the vision in line with those pillars of maintaining financial stability and economic stability, and of course, the trust of the international community in the vision.
This is actually very important. I think it is also important, particularly these days, with a lot of countries struggling really with the uncertainty, the fragmentation, the geopolitics. I think the secrets, I'll tell you the journey. The journey, basically, if I want to summarize it very quickly, is 3 phases. So we started the 5 first years, really in the planning, preparation, and structural change. So a lot of painful decisions, but at the same time, we needed also to do things that touches the people very quickly. So things like housing programs, increasing the house ownership from what it was 42 and to 65, etc. And the second phase, the second 5 years, which ended by the end of 25, was really doubling down in execution. And the third phase, where we started now, is really maximizing the impact, learning from the mistakes, rewriting things that needs to be rewritten, reprioritizing, making sure that you take stocks of what really have you done well and double down on them, what needs adjusting and adjust and move on. But then staying the course. A reform like this needs a lot of gut, a lot of bold decisions will need to be made, and you need to stay the course through difficulties. The second point, which is very critical, is don't compromise in your anchors. So in our case, The anchor of the economy is actually the public finance. So don't compromise public finance for the sake of the economy. So you need to make sure that you balance the two. If you actually go and just spend as if there is no tomorrow, you are losing your anchor base while the economy is still growing and still diversifying. So we actually maintain that balance very delicately.
Is that another way for saying keep the deficits under control?
Keep the deficit under control. Make sure that you are actually spending where it matters, where it creates better growth, better jobs, better GDP impact, balance of payment, and make sure that you don't overheat your economy. I mean, we have seen actually in the last couple of years, the economy in certain sectors started to see overheating. So there is no issue at all, no shame, no ego of adjusting. So slow down in certain sectors, in certain projects, so that you allow your economy actually to grow with you. You allow the private sector to catch up with you. And the last point, which is absolutely critical, is you really reach the threshold of really the real reform, not by getting unemployment only to where the target is, or the housing where the target is. It's actually getting the real, I would say, philosophy behind the vision, the real reform, to be the default action of the people. So you don't need to continuously press 18 hours of work. You don't need to do the follow-up every day. It becomes the norm in the institutions. You know, it becomes actually the norm with the people, that they embrace it, and you see it. I mean, those who are not from the region, and particularly in certain regions, without naming Europe, that is depressed. I mean, you see the people that are grumpy. Go and visit Saudi. Actually, you will get a lot of positive energy from there. The people, just the driver who will drive you, the tour guide who will be with you, they will give you that positive energy because they believed in it, they saw the benefit, and we are communicating with them that it is a journey. Certain parts of it will take actually a long time. Mining, I mean, we had the Mining Future Forum last week. It is an incredible journey that we are going through in the mining, but we will not see the results next day. Mining will take 10, 15 years. And industry will take 5, 7 years. So we still haven't seen all the results, but you need to keep your people excited and engaged.
I've been interviewing you and His Excellency Faisal for several years now, and I always remember the phrase deficit by design, and I just wonder whether that's going to continue to be the case over the next few years.
I would say that the short answer is absolutely yes. And I was asked this, I think, a couple of days back. The current deficit is actually a policy decision, an absolute policy decision. And if you calculate, and don't take my numbers, I mean, these are published numbers. If you calculate the total amount of debt that we have, which is about 1.5 trillion Saudi riyal, and compare it to the capex that we spent during the same period, the last 10 years, you will see actually we spent on the capex more than the debt. So as long as you borrow to spend on something that will actually ignite growth for the future, you are safe. If you borrow to spend on consumption today, you are in trouble because you are actually leaving your kids with that burden, with that liability.
Yeah, that's exactly the conversation Jenny and I had yesterday in our global debt panel. Your Excellency, I want to come to you just to build on what His Excellency Jadaan was saying, and also vis-a-vis perhaps more targeted spending. What are the main sectors that are going to be the focus in this next phase?
So I'll just add to what His Excellency said. I think the key driver is optimal deployment of capital. And I think by now the Saudi system knows when to go full throttle and when to fine tune. If the debt increases, deficit increases, debt increases, now higher chance than ever that it's going to something specific that's going to create value and give us the return. As far as sectors, maybe before that, I think just momentum is strong in many sectors. If we look at, and we talked about this, non-oil activities today represent 55-56% of total real GDP for the first time. Momentum is great. Today,
That's
74.
up 6% from last year, right?
No, up, I'd say 2 or 3.
Okay.
It's been inching upwards, but it
The
takes
growth
a lot of
is
effort.
5%. The non-oil growth is 5%, but what
Yes.
His Excellency is talking about is non-oil as a total GDP.
Yeah.
And non-oil growth, we project for the next 3 years to be between 4.5, 5.5. We're still debating some teams, but we have a governance on it. But it's comfortably 4 to 5%, maybe even higher, actually conservatively. Within the non-oil activities, which are 81, 74 have grown over the last 5 years, 5% annually or more, and 38 of them have grown 10% or more. And if you look at these activities, they're across the board, and they're represented by quality growth. So we see non-oil exports growing. We see number of factories in establishment or in foundation growing. The pipeline also growing. In terms of tourism in the sector and the trade balance or the exported services balance switching to positive in a very short period of time. So there are indications that it's working and it's delivering. But the question became, at what cost? We know it works. We know the momentum. We want to make sure it continues with optimal impact at the right cost. It was justified at that period because you wanted to catch up, decades of untapped potential, to kind of accept some losses or costs, etc. But moving forward, it's about wise spend coupled with structural reforms that are, deliberate and that give us the results that spending money will be limited in terms of. So I think the continuation of the same sectors, the anchors that His Excellency mentioned, energy and its wider definition with energy transition solutions, healthcare, there's a real challenge in healthcare. There is a real demand. The population is 70% below 35. It'll start aging in 20 years, 18 years. And then defense technology, artificial intelligence, mining, like His Excellency said, I think across the board you'll see that whether they're new sectors or sectors with deep knowledge accumulated over decades, they will witness a lot of new growth drivers.
Yeah. Ajay, almost every country country representative that I speak to, not that I'm speaking to every single country around the world, but there is a focus on investment in artificial intelligence, on the technologies of the future. I think there's a lot of conversation around strategic investments in AI to develop a technology advantage, but also one that promotes inclusive growth. So how do you think about the digital divide and various advancements of artificial intelligence around the world in an environment where we said there are many, many challenges and governments have to think about where their spending is going?
How much time do you have? That question could consume 16 years. So let me just answer in 2 parts. The first is AI itself. What we've been discussing in Davos for the last few days is a certain type of AI, large language models, headed towards generative AI. Very important. Great opportunities in certain kinds of things coming from it. People are talking about the challenges and services jobs in particular that it could create, but look at it from a different lens. What do you need for large language models and generative AI? You need 4 things. You need computing power, lots of it. You need electricity, lots of it. You need data, lots of it, kept in its simplest form with safety and security built in. And you need people who understand how to manipulate all that. There are very few emerging markets in the world that have those 4 things. Very few. So if anything, I believe, if all we talk about is large language models and generative AI, I think inequality will expand, not reduce. On the other hand, small AI, not big AI as in this, but small AI is different. Small AI connects back to my jobs point, which I'd love to talk about for a minute, because it connects to Vision 2030. So let me explain small AI. If I'm a farmer in a village in Kenya, and I can use a phone to point to a disease on this plant, and I have no idea what the heck it is. And I don't want to know the name because I can't pronounce it. But I know that that disease is fixable by that insecticide that I can buy for $3 from my farmer's cooperative. That's small AI. Or I can go to a primary healthcare clinic in a remote area of Saudi Arabia, and Mohammed comes in, I'm the nurse there, I'm not a qualified doctor. He says he has a rash here. I can take a photograph. I send it to you, the doctor. You say it's just eczema. Give him this ointment, tell him to go away. Or it's actually something I don't like. I'd like him to come to the regional hospital within X number of days. Here's the appointment set up. Actually, Saudi, coincidentally, is one of the biggest users of this idea of a virtual hospital. But anyway, that's a side comment. What I'm trying to tell you is that's small AI. It changes your daily life. It makes emerging markets people feel that AI is their help in productive, high-quality growth in the coming years. If we don't manage this conversation well, we will lose the large majority of the world's population that will not be living in the developed world in 15, 20 years. I keep coming back to that point about that demographic piece. Trust me, this is not a light at the end of the tunnel. This could be a freight train if we are not careful about those demographics. So jobs, look at how Vision 2030 integrates everything. If you talk to the leaders in Saudi Arabia, like these guys and their boss, what is Vision 2030? It's actually a way to design Saudi Arabia of tomorrow for its people to be supremely happy that they are living in a place that makes them glad to be on earth. That is what it is. That is why the energy of Saudis is what it is today, because they're seeing that come. But when you convert that vision into day-to-day stuff, it's about doing the right things that create jobs. What are those? First, build infrastructure. What has Saudi done over the last 20 years? Built amazing infrastructure, not just physical, but human. How much money is this country investing in human capital, in skilling, in education, in healthcare? Large sums of money. So they're building both physical and human infrastructure. Second, they're focused on liberalizing their regulatory regime. Sensibly, paced, but done. What have they done? All kinds of laws, labor law, land law, bankruptcy law, you name it, these guys are working it methodically and systematically. So businesses can feel, I get a predictable but liberal environment. I know the guide rails. I should not go out of them, but within those guide rails, I can make money the right way. And then the third is financing. The amount of money that has been plowed by them into creating the right catalytic opportunity for medium and small scale enterprises, who, by the way, are under-noticed as the real drivers of job growth in this country. That's the third thing. Why am I telling you all this? That's Vision 2030. It goes back to 5 sectors that don't rely on trade as the only way to grow. What are those? Infrastructure, primary healthcare, tourism, which is the single largest generator of job for every dollar invested in any industry. Value-added manufacturing, minerals, metals, energy, other things, defense industry, and then agri-technology for small farmers.
Yeah.
And all this backed up by entrepreneurship opportunities, which is one of the things that His Highness is very focused on.
Yeah.
So why did I start with jobs? Because I think Saudi has the demographic dividend that it wants to capitalize on. Their leadership has figured out that they need to do it in a way that's constructive and makes people happy to want to be in Saudi. They don't want only Saudis to benefit. They want their neighbors and their region to benefit because they care about the bigger picture around them. They're actually watching a revolution going on quietly. And I'm a big admirer of it. So that's my piece.
Well, Jenny, you get the follow-up question to that, given that the revolution
that was
is going
very
on.
comprehensive.
It was very comprehensive, but at the same time, I think His Excellency Alibrahim and Ajay both brought up the fact that there isn't a lot of interest in other sectors of the economy that are really beginning to take off now. And I've had many conversations with asset managers, investors from around the world, increasingly looking at Saudi Arabia as an investment destination because these are very attractive sectors to put your money in, because they're going to be high growth and there is stability over the next couple of years. So what is exciting you about the opportunities right now in the kingdom? And then also, you've got a lot more competition in that space.
I mean, interestingly, one of the things we've gone into private markets. Why? Because one, banks aren't lending like they used to, so private credit's grown, and people don't want to go public, and so companies are waiting much longer to go public, so you've seen this dearth of IPOs. Saudi Arabia has had the most IPOs, I think, in the region, and their trajectory is going up, and I think the projection is this year it's going to double from last year. And
the opening of the capital markets will.
Well, one is, I think in February 1st, you're going to have opening up of foreign investment in there. There's already been, but you have to be qualified through certain things, but it's going to open up much more broadly. But even if capital comes in, you still have to have the entrepreneurs in the system that are actually building those companies and getting them to a point that they can go IPO, which means they have governance, their financials are audited. You know, there's a lot that goes into that that then becomes appealing to the institutional investors that are coming in the market. And so, again, I think that and I have sat with various ministers where they have said, you know, tell us what we need to do so that we can improve our markets. What do we need to do to be more attractive? That doesn't happen in every market, right? I mean, there's been a real intentional just an intention around part of Vision 2030, where I think everybody knows you can't fund it all internally, right? And so you're going to have to get it up to institutional standards around governance and also create that kind of environment where entrepreneurs can be successful. And that will drive capital in there. And honestly, I think that you're seeing the trend in the numbers. I do think there has to be a lot of improvement in the debt market. There's a lot that needs to happen to support the equity market, but the equity market is really showing a lot of health from the growing economy.
And the competition question?
Competition as far as foreign capital coming in and competing with others. Yeah, listen, we deal with it all over the world. Like that's, you know, that's just
it's
the game we're
healthy.
in.
It's a good thing. Competition. Every time I ask anyone about competition, they say competition's a good thing.
Hey, I have to just say, with Franklin Templeton, we've been in the region for over 25 years. We'll have offices in 4 countries in the region, and we actually have local asset management. We are one of the largest Sharia managers. We know this area. We're one of the biggest GCC bond managers. We love it, and you have to know individual countries.
Yeah.
You have to understand the culture to be able to invest in it. I think it's a much greater disadvantage to be far away and trying to invest in it without actually understanding the ecosystem.
Yeah.
So we've got that advantage.
Well said.
Noubar, let me turn to you, since innovation technology is also coming up as one of the themes of this panel. You have a partnership with the King Faisal Specialty Hospital, putting on, of course, the healthcare cap. How does that support the drive for inclusive growth and inclusive innovation?
So the idea really started out with, a couple of years ago, we were asked to think about what could be done to jumpstart and really achieve a biotech ecosystem that's excellent much faster than would normally happen. If you look across the world, these kinds of ecosystems emerge, and they take 25 to 40 years. And people look at the US and Silicon Valley and Boston, particularly in the biotech sector, and they say, I want one, except these things emerged, and it's just impractical. Plus, the second time they emerge, they don't emerge the same way. So you might think you're gonna wait 25 years, but it might be a lot longer. So when we were asked this question, one of the things we thought about is, you know, in the kingdom, there is this practice in the past, which has been quite successful, of building a international or joint champion that ends up becoming the national champion. And if you look at companies like SABIC or Ramco, et cetera, in a different time, that is how there was a critical mass built. So one of the things that we've been attracted to and we've been talking about is what would it take to build a global standard bearer, and could it even be done in the biopharmaceutical arena, entirely dedicated to new medicines. Not how do you secure the supply of blood plasma-derived drugs, et cetera, but rather a real kind of pioneer. And of course, in the vaccine area, you need that even more nowadays, because you don't know where you're going to get your next vaccines from, because they've been highly politicized. In reality, WHO is under a lot of stress as a result. So we kind of started thinking about that. And of course, our base of operation gives us the ability to think about that, because we have 40 companies in Boston, 10,000 people that are working on all new medicines. So a way to connect that with a new generation company was interesting. But you can't start with that. So one of the things we looked at is we said, okay, how do you do this in parallel? And one of the things we found is an interesting starting point for clinical trials. We said, well, what if we try bringing a few assets and doing the human clinical trials there, let's say 20, 25% of the overall size, particularly for diseases that are highly prevalent. These are rare genetic diseases. These are diseases where there's a real need and there's a preponderance of population. In doing so, we realized we could both test to see if the system can be scaled and we can bring a lot of know-how and expertise. So we started that with the National Guard's healthcare system, and there's 4 programs that we've launched. But then at the same time, we've started looking at what about the underlying R&D infrastructure, and in particular, what can we think about doing with respect to AI? Again, I want to bring it back because I know every other discussion of every other panel here has had this, and just for a little bit of inclusion, we should bring AI in that I wouldn't dare do this without an era where the data-driven models are going to allow us to go much more definitively down the path we want to go than trial and error. Science-based businesses are very iterative trial and error, and I think what AI gives us the ability to do is to do that in a way where investors can still not have high degree of predictability in the beginning, but pretty quickly you get overwhelmed with the technology advantage that you're bringing in. So we're working a little bit with Humane. We're going to be accelerating some of that. And so it's an interesting time to be thinking, can you construct an ecosystem that brings food, health security and health prosperity over a relatively short period of time? We're talking about 5 or 10 years. And if so, how would you do it? And what are the elements? This partnership you talked about, which we just began late last year, is a first step of many to do that. And it's very consistent with the vision, but it brings a whole new dimension. And interestingly, it's a place in the world where we think we can do this. It's not like we're trying to do this everywhere, unlike fragmentation, where there's a huge global experience. For us, this is an experiment, but we think it's worthy.
Yeah. Your Excellency, we're coming to the end of this discussion, but one of the essential features of Saudi 2030 vision is that it is a long-term vision, or when it was put together, it was a long-term vision. We're coming close to 2030 now. And I wonder whether there are lessons that can be gleaned for countries outside the kingdom that don't have the benefit of putting together, say, a 10-year, 15-year, or 20-year plan because they're beholden to a 4-year or 5-year election cycle. What are the takeaways from your own experience?
I thought you will ask me an easier question.
You know me.
Getting into politics, but
no politics.
I mean, I will answer right, and I really feel strongly about this, very strongly. Whether it is a business or a government, if you cannot really, particularly in a time where there is a lot of turbulence and a lot of uncertainty, if you cannot take a long-term view and stick to that plan, it is going to be very difficult. And the fact that, you look at the next quarter or next year's results if you are a company, or the next 2 years election cycle if you are in a democratic system, is a troubling prospect. And I think somehow corporates will obviously need to take long-term, and democratic system will need to find a way to adjust that system so that they can have actually 10 and 15 and 20 years plans. China did not win because they planned for the next 2 years and 4 years. They won because they have 50 years plans. Korea, I mean, let me not even talk about Saudi. Korea won, I mean, they were way below some of the low-income countries today that we see. But they say they are successful now because of long-term plans that they stick to during good times and bad times. Singapore was one of the poorest countries in the world. Now they are AAA rated, one of the most successful nations. Why? Because they had long-term plans and they stick to it. That's the message.
Okay, well, panelists, I think that's a great way to leave it. Thank you so much for all of your input. It was a fascinating discussion from the global to the Saudi Arabian template, and hopefully you all benefited from all of the input that we got on the panel today. Thank you so much for attending.
Thank you.